On today's episode, we are going to take a look at a few stocks to buy. Like most of my viewers, I put money to work on a timely basis. For me, I put money into my account every single week. So every single week, I'm looking to put that money to work. Sometimes it might be a new investment, or it might just be an old position that I'm trying to increase my size in. So to me, I'm trying to bring value to you as the viewers, and hopefully maybe you might add some of these stocks to your watch list and take a look at them later on. So today's episode is going to be broken down to the following. First, for each company, we're going to take a look at what they do, see where that revenue is coming in, what segments are they hitting. Next, I want to take a look at their future growth. Because as long-term investors, we want our positions to grow. So the best place to see is what are analysts expecting these companies to do in form of revenue growth, in form of earnings growth throughout the upcoming years. Also, as long-term investors, we should care about how the past has looked for these companies. Are they seeing any improvements? And at the end, I'm gonna end with my thoughts. So like always, if you're new to my channel, if you're a long-term investor, if you like to learn about growth stocks, make sure to hit that subscribe button. To all my returning viewers, thank you so much for the support. It truly means a lot. Like always, if you guys want to get in contact with me, YouTube comments, you can find me on Twitter. You can find me on my Discord channel, which is free to anybody that wants to join. You can find me on Twitch, live streaming, and also at josenaharo.com. But remember, all of this is my opinions. I am by no means a professional, so none of this should be taken as advice. So make sure to talk to a financial advisor before making any financial decisions. Now that we got that out the way, let's get started. So the first stock we're going to take a look at is Microsoft. And if you guys ever want to see when I buy a position or when I sell a position, feel free to join my Discord channel. It is free for anybody that wants to join. I'm not charging anybody anything for my opinions here. But if you want to check that out, you should see the link in the pinned description, on the pinned comment, or in the description. All right, so the first company we're going to take a look at is Microsoft, and this is ticker MSFT. Microsoft right now has a market cap of about about $1.6 trillion. So this is one of the giants right now. Year to date, Amazon has returned about 30.6% to investors. In the past month, they did peak and it did see a bit of correction compared to the market as well. So right now, it's down about 10% from its all-time highs of September. In September, it reached about $231. Right now, it's sitting about $207, so about $23 below that price. So Microsoft, in their most recent earnings, they did GAAP earnings per share of $1.46, and they did revenue of about $38 billion, and that's up almost 13% compared to the same time last year. If we want to see that $38 billion of revenue breakdown, it's pretty much in three sectors. They have the productivity and business process, which is about 11.75. They have the intelligent cloud, which is about $13.4 billion. And they have the more personal computing, which is about $12.91 billion. So we can see within their three segments, they are divided pretty evenly. The intelligent cloud is probably the one pulling the most weight, but it's not pulling much more compared to the other ones. And if we want to understand a little bit more of their products, the productivity and business process, this is pretty much like their Microsoft Teams, any form of Microsoft Office for business. You have your LinkedIn there. Then you have the intelligent cloud. Here you have most of their Azure clouding platform revenue. And in the more personal computing, you have a lot of things like the laptops, the Surfaces, you have Xbox content there. So we can see there is growth in all three in their segments, which is definitely a great thing for for Microsoft. And for me, I am very bullish in two segments, and that is the clouding segment and the gaming segments, and two segments that Microsoft is pretty heavy on. Now let's take a look at what analysts are expecting for Microsoft. Microsoft in the upcoming years is expected to grow its revenues about 9.5% annually for the next 3 years. This doesn't mean it's going to grow 9.5% every year. It means maybe this upcoming year might grow like 13%. The year after this might grow like 8%, and the year after that maybe another 8%. So on average within the next 3 years is 9.5. The one thing we are seeing right with this chart is Microsoft's revenue and earnings per share are expected to continue to grow as the years progress. Now that we see that they still have a healthy, moderate growth, let's take a look at past financial values for Microsoft. In 2020, Microsoft grew its revenue about 13.6%. In 2019, it grew about 14.03%. And in 2018, it grew 14.2%. So on average, it's growing around 14% for the past 3 years. For a company this big, this is actually pretty strong growth in my opinion. So we don't see many trillion-dollar companies growing their revenue at these types of levels. Next, let's take a look at those margins for Microsoft, and let's just zoom in a few more years. In the past 4 years, Microsoft has kind of improved its gross margins. The trend is kind of up. So gross margins for Microsoft right now are 67.8, where about 4 years were 64.5. Earnings are also kind of improving in a overall trend. Right now, they're sitting at about 31% for this most recent year, which ended in June. Their fiscal year ends in June. Right now, their upcoming September, end of September, is going to be their quarter one of 2021. But like I mentioned, 2020's gross margins were 31%, where in 2017 was 26.4. So we are seeing an improvement in both gross margins and profit margins. Not by much, but we're still seeing improvement there. Next, I want to take a look at their balance sheet. So Microsoft right now has about $136 billion of cash available to them. And they're using that cash for some cool acquisitions. They recently just purchased a company. And if you guys want to learn more about Microsoft, make sure to check out my previous video I did on yesterday. And I pretty much did a full analysis on Microsoft. If you think what I'm doing now is pretty in-depth, wait till you see that video. I pretty much hit a lot of a lot of more metrics and try to explain Microsoft a little more in depth. But $136 billion of cash. This company has about $67 billion of non-current debt and about $3 billion of current debt. So cash to debt ratio is off the chart. This company has a very, very strong balance sheet, and it's using this money to buy acquisitions. This is a company that has plenty of cash right now. It's profitable. It has great cash flow margins. So it's definitely one that I would love to see in my portfolio. So now that we took a look at there, I want to give a little bit of my thoughts and talk about why I purchased Microsoft. So Microsoft might not be as heavy growth company like most of the other stocks that I look at. But with Microsoft, we're hitting segments that I'm very bullish on, the gaming segment and the clouding segment. It's also a leader in some of these segments. I think it's number 2 in the clouding market right now. And it's one of the leaders in the gaming segment. And they're delivering more products, doing acquisitions to continue to grow their strength in those. So Microsoft easily would be one of those stocks where, even though it's not a true growth stock, it's one that I wouldn't mind having in my portfolio, because it's a position that, even though it might grow a little bit slower compared to my other growth stocks, it's one that I really wouldn't be too worried about. So I do believe it's a lot less riskier than my other stocks, and still can provide positive returns in the long term of things. For me, Microsoft is a tier 1 stock. Those are the ones that usually hold the biggest position size in my portfolio. Next, we're going to take a look at C. And C is one I've talked about many times. And all these stocks there's three stocks that I added that are old positions, and there's one new position that I ended up buying. And all of these 4 stocks that I purchased, I have done videos on and done a real depth analysis on them. So make sure to subscribe to the channel so you guys can learn more about them. So C right now is sitting at about $155, and it has a market cap of about $75.74 billion. So C right now is sitting at about $155. Year to date, it has done amazing to investors, almost 300%. And this is one that I've been talking about for many months ago. I definitely mentioned it in May when it was around $82. So even from there, it's up almost 100%. In the past month, it did see a bit of a pullback. That pullback dropped at about 15% at its lowest in September, but right now it's only down 4% from where it was at its all-time highs of September, which was $161.80. Now let's take a look at C, right? And this is ticker SE. C is a Singapore company in Southeast Asia that deals with gaming, it deals with e-commerce, and it deals with fintech. Right now, for their most recent year, they did revenue of about $1.3 billion for the quarter, and that was in August 18th. That was revenue growth of about 94%. So this is a true growth company. Out of that $1.3 billion, about $700 million came from digital revenue. That's pretty much like their gaming and any other form of applications they deal with. And then 510 million came from their e-commerce, which was 189% growth compared to the same time last year. So Sea for the upcoming years is expected to grow its revenue at 28.1% annually for the next 3 years. This is a true growth stock, one that is growing at crazy levels. Not many companies are seeing this type of growth. If we take a look at their margins though, first let's take a look at their historical growth. Revenue growth for Sea in the past in 2019 was about 163%. That's crazy growth. In 2018, it was almost 100%. In 2017, it was a bit slow, about 20%, but 20% is still high growth in my opinion. Now let's take a look at profit margins. Profit margins and gross margins for Sea are not the best. This, like I mentioned, is a true growth stocks, and normally with growth stocks, they tend to be unprofitable for some time. As long as their profits are improving throughout the years, that's something I want to see. And if they are not making money right now, I want to make sure that they have a very, very strong balance sheet. So let's take a look at gross margins. In 2017, gross margins for Sea were 21.1%. In 2019, they were 27.8%. So we can see a trend of improvement there. Profit margins in 2017 were negative 135%, and in 2019 they were negative 67.2%. Again, we can see this is definitely it's not close to being profitable right now, but analysts are actually expecting the company to be profitable by the end of 2023. So at least there is some light at the end of the tunnel. Remember, I mentioned because this company is not profitable, we have to be a lot stricter on its balance sheet. In its most recent balance sheet, the company had about $3.4 billion of cash and $2.1 billion of debt. Most of that debt is just long-term lease obligations. So this company has plenty of cash to pretty much pay off its debt and still have cash to continue to grow. So to me, even though it's not profitable, as long as it has strong cash in the bank, it's a company I'm willing to invest in. So now my thoughts on Sea. Sea is another one, like Microsoft, that is a tier 1 stock, one that holds one of my biggest position size compared to my other portfolios. And I do have 9 companies that are tier 1, and then I have tier 2, and I have a tier 3. Sea is in markets I'm bullish on. It's in the e-gaming market, and it's in the e-commerce, and it's in the fintech. 3 markets I'm completely bullish on. It has a strong balance sheet. It has crazy growth in the upcoming years, and in the past 2 years, it has seen that strong growth as well. So that's why Sea is one that I'm willing to continue to buy and add to my portfolio. So Sea, I would say, is a little bit more riskier than Microsoft, of course, especially because it's not profitable. But I do see the long term of things. It's gonna provide me with greater returns than I would have seen with Microsoft. Again, right? That's what you usually pay off with that risk and reward. With Microsoft, I feel like it's a little bit less riskier. I do believe I'm still gonna get great growth with Microsoft in my investments, but I believe with Sea, it will be a bigger multi-bagger compared to Microsoft. And sometimes that's what you pay off. But I try to eliminate that risk by understanding what the company does, and also by doing these fundamental analysis and making sure the company will be able to survive the upcoming years and give me time to really see the progress of the company. The third company I purchased was Autodesk, and this is ticker ADSK. Right now, Autodesk is sitting at $227, and it has a market cap of about $50 billion, so it's even smaller than Sea. Year to date, Autodesk has returned about 21% to investors, and in the past month, compared to its peak in September 2nd, is down about 12%, almost 13%. So we have seen some strong pullbacks, right? A 10% drop, over a 10% drop from its peak is usually called a correction. So in its most recent earnings, which was about a month ago on August 21st, Autodesk reported some strong numbers. Autodesk is pretty much in 4 products. All their products have to do with some form of software. They're a software company, and their software application is used to create for architectures, engineer constructions, to model some form of item or model some form of buildings. They also have AutoCAD and AutoCAD LT. They have software for manufacturing, and they have software for media and entertainment. I think Maya is one of them, that if you're an animator, you use their applications to create animations. So within those 4 products, they made about $913 million of revenue. Out of that $913 million of revenue, over 400 million, so a little bit over 40%, came from their AEC market. And that's anything that deals with architecture, engineering, and construction. That's up 19% compared to the same time last year. Then you have AutoCAD and AutoCAD LT. That's 271. So that's a little bit less than 1/3. And that grew about 18% compared to the same time last year. Then you have MFG, which is the manufacturing, that made 185 million. That's up 6%. And you have their ME, which is media and entertainment. That's about 53.3 million. Very small portion, but that's still up 5%. So all their segments are up, and the ones that pull the most weight are up almost double digits. Total revenue compared to the same time last year was up 15%. So Autodesk, let's take a look at that future growth. Autodesk is expected to grow 14% annually annually for the next 3 years. This is not as heavy growth as C, but it's not a slow grower like Microsoft. So it's one in between. It is profitable. It just became profitable not too long ago. 2019, I think, was its first year of being profitable. And we can see as revenue continues to increase, earnings are also expected to grow. So let's take a look at historical revenue growth. In 2019, year to year, Autodesk grew 27.4%. In 2018, it grew 24.95%. In 2017 was a slow grower at 1.26%. Now let's take a look at these gross margins and profit margins. So we can see now we saw Microsoft, the company that was profitable for the past 3 years. We saw C, a company that wasn't profitable, but it is improving. Now we're looking at Autodesk. Autodesk is the perfect example of the transition between C and heading to Microsoft, where look, profit margins in 2017 were negative. Now profit margins for 2019 were positive. So we can see that growth of profit margins increasing. So that's a great thing. It means that, to me, profits are still going to continue to increase as they improve. The other thing is Autodesk is a software company, so gross margins tend to be really high. But look, in 2019, their gross margins were 90.1%. In 2017, they were 85.2%. So they're also seeing improvements in gross margins. Now let's take a look at that balance sheet for Autodesk. Balance sheet for Autodesk, they have about $1.5 billion of quick cash if we add their cash and cash equivalents and their current investments. They have about $2 billion of non-current debt and about $53 million of current debt. So about $2 billion of debt. And so this company does not have enough cash to pay off its total debt. But look at that. This company has deferred revenue up that wazoo, about $3 billion of deferred revenue. You guys might be like, Jose, what's deferred revenue? The best place to explain it is, Netflix. Netflix, you pay an annual subscription. Even though you give your upfront money to Netflix all at once at the beginning of the year, let's say it's September, they still owe you 3 months of streaming services. Those 3 months, they can't really collect it as revenue because they have yet to give you the product. So that goes into deferred revenue. So this is just all money that would eventually move to this side, to their income statement. It's just that the time-wise hasn't been covered yet. So this company has enough deferred revenue to pretty much pay off its total debt. So this is definitely another strong balance sheet, and it's a SaaS company that is just hitting profits. And I do believe those profits are going to grow in the upcoming years. So my quick thoughts on Autodesk. Autodesk for me is not a tier 1 stock, unfortunately. It is one that's right now, I believe, might be a tier 3, so it has my lowest position size, but I am trying to increase it to a tier 2 stock. It is in markets. I believe the software, especially the content creator. So Autodesk is such a big name down. It's being used by such a big industry that I do believe we're gonna see that strength coming in, and that's why it's gonna be very hard for companies to leave Autodesk for any new software that resembles Autodesk. Again, it's not a heavy grower like Microsoft, like C, but it's a bit faster than Microsoft. And I do believe it's still going to provide me better returns than the market in the next 5 years. The final company that I purchased, and this is one that this is a new investment for me, and this is Unity, ticker U. This is a recent IPO. Unfortunately, I did not buy in the IPO process. And this one was a learning experience for me. So when it went IPO, I did not purchase because I did believe it's a bit overvalued. To me, if I may be honest, I still do believe it might be a bit overvalued. But emotions were getting the best of me, fearing out that I did not buy the company. So I ended up purchasing on Thursday, which dropped about $78. And I ended up buying just a small position. And the reason I ended up buying a small position was for the following reasons. I started feeling like emotions were starting to play a big game into my Unity decision. So instead of going in a big position with a big position size and let my emotions take over, I decided to enter in a small position. This allows me to calm down my nerves, calm down my emotions, and it allows me to keep a closer eye on Unity. So Unity is one that potentially has the growth to go to 1%, but to go to a tier 1 stock. But like I said, right now I believe it's too overvalued for my taste to really just go all in the stock. So I decided to buy a little bit to control my emotions and keep better eye on it. As I see, if I end up seeing a pullback, I'll buy in a lot more. But if it continues to ride this wave up, at least I'm happy I'm inside the position now. So emotions are now all out of the game. So Unity is a software company that is used to create video games, and is also being used to create like artificial augmented reality and virtual reality games and other type of media. Right now, the biggest customers are the gaming world. But I do believe as things continue to progress in technology, more sectors are gonna really try to use this virtual reality and augmented reality, and they're gonna be using a lot of Unity. So let's take a look. Like I mentioned, Unity is a brand new IPO. Since IPO process is up 31%. Just the past day was up 8%, and after hours is up another 1.2%. Let's take a look at Unity's revenue. In the current 6 months, revenue was about $252 million. Actually, it's $351 million. That's up 40% compared to same time last year. If we take a look at the first 6 months of the year, that revenue segment is pretty much broken down into 3 solutions. They have Create Solutions, and this is when a company uses Unity software to create a game and all the licenses they get for using those softwares. Then they have Operate Solution. This makes up closer to 2/3 of the total revenue, and that's $216 million out of that 351. Operate Solutions is, let's say you create a game and you need help with testing your game, if you need help with running servers, with promoting your games, or just any type of help now that you created your game, any form of operating help, that's where that comes in place. And that's pretty impressive. The great thing about Operate Solutions is you don't have to create the game through Unity. You could have used any other platforms, even some of their competitors, and then you can come to Unity and get their advice there. Next, they have strategic and partnerships. This is $32 million, about 10% of total revenue. This is not one I'm very excited about, but it's still there. So Unity, their growth, this is another crazy growth. Like C is expected to grow revenues about 25.5% annually on average for the next 3 years. Unfortunately, Unity is not expected to be profitable anytime soon. And that's definitely, I believe, something that's going to deter a lot of investors in the upcoming years. And when they do report earnings, I do feel that those that might have bought into the hype or might have bought not really doing their fundamental analysis on the company, might see some form of a pullback on their most recent earnings when they see it's not really profitable. In 2019, revenue for Unity grew about 42% compared to the same time last year, and they only gave us 2018 values, 2019 values, and the current values that they're sitting at right now. If we take a look, gross margins are pretty much flat. They're sitting at 78.1%, but remember, this is a software company, so they tend to be pretty high. Profit margins in 2018 were negative 34.6%. In 2019, they were negative 30.1%. So we are seeing at least some improvements in their margins. So that's good to see. Again, this is definitely a growth stock. I want to say this is probably even a little bit more riskier than C. But at the end of the day, we have to make sure that balance sheet is okay as long as since it's not profitable, they need to have plenty of cash at hands to be able to survive. So Unity at the end of June of their second quarter of 2020, which ended June 30th, they had about $475 million of cash and cash equivalents. They have about $231 million of non-current debt and about $25 million of current debt. So this company has plenty of cash to pretty much pay off all its total debt. So for me, it's a company that I don't see going under anytime soon. So for me, Unity has the potential to go in tier 1. But unfortunately, it's, I believe, a little bit too overvalued for my taste. But as a long-term investor, I don't really try to time the market. So what I ended up doing is I ended up going in a small position just to control my emotions and try to really time the market, because I think that's what I was trying to do. I was trying to time it for a pullback. But now that I'm in it, I kind of took away that emotion out of the game. And now if I'm happy if it continues to go up, I'm happy I'm in. And if it drops down, I'll be happy to add on. At the moment, based on the current valuations, I think Unity will only make it to like a tier 2 stock. If it does drop down a lot, it can easily be a tier 1 in my portfolio. So these are the 4 stocks I purchased this week. Let me know in the comments, guys, if you liked any of my picks. Which one are you going to do any more research on to get a little more information on them? And like I said, most of these, actually all of these, I have done a really full in-depth analysis. Maybe not on Autodesk, and maybe I should do one on that next. But make sure to subscribe, guys. Hit the thumbs up. It helps the channel out so much, and I truly, truly appreciate it. So thank you guys for today's episode. Like always, make sure to hit the thumbs up and let me know in the comments what are some of the stocks you guys purchased this week.